Okay students, we are continuing with the basic accounting terms. You have already learned few accounting terms which are bookkeeping and business transactions, then capital, then account receivable, then account payable, then cash flow, then liabilities, both current and fixed liabilities you have learned, then assets, both fixed and current assets you have learned. Now there are few more terms which you should know before you will be going to the core accounting topics. Now, who is a creditor? Before that, I want to say that whatever you will be doing in accountancy or whatever sums or whatever term you will be using, you have to see everything through the eyes of the business. Okay? So, who is a creditor? A creditor is a term used in accounting to describe an entity, can either be a person, organization, or a government body that is owed money, as they have provided goods or services to another entity. Sometimes this entity will charge interest on money borrowed as a way to make money. This could be interest on bank loan payment or credit card payments. In simple words, if I say, from the business point of view, a creditor is a person or an organization to whom the business have to pay money in future. As we have to see everything through the eyes of the business. So who is a creditor? A creditor is a person or an entity or an organization to whom the business have to pay money in future. A creditor is a liability. Next, debtor. Debtor is just the opposite of the creditor. Debtor is a term used in accounting to describe the opposite of a creditor. An individual that owes money or who is in debt to an organization or person. For example, a debtor is somebody who has taken out a loan at a bank for a new car. If we see from the business point, a debtor is a person or an organization from whom the business will get money in future. So a debtor is a person or organization who have to pay money to the business in future. Okay. Say for example, we have sold 20,000 goods to a supplier. To a customer. Okay. Then that person have given us 60,000 and he told that remaining 40,000 he will be giving in the future. So that 40,000 we will be getting in future. So that person is a debtor. That means from that person we will be getting money in future. So debtor is an asset. Next is drawings. A drawing account is an accounting record maintained to track money withdrawn from a business by its owner for personal use. So what is called drawing? If an owner of the business withdraws money from the business for his personal use. Say for example, he have withdrawn money to buy his personal car or building, then that is called drawings. If the owner withdraw money from the business for personal use is called drawings. Next is proprietor. Who is a proprietor? A person who owns and usually manages a business is called a proprietor. So the owner of the business is called the proprietor. And one more thing on credit. Now you always say, okay, take it on credit. You have heard this things. So what is credit? On credit or an account means that the product or services has been sold with the use of credit. Payment has not immediately been provided for these items, and there may be terms on account that may result in interest charge. Okay, the credit means the amount has not been paid yet. We will be paying that amount in a short time. We have not paid the cash yet, so that is called the credit. Okay, not paid the cash yet, but we will be paying. Okay, so that is called credit. So I hope you have learned the few accounting terms. We will be learning new terms in future also, but these are the terms which you should know. These are the basic accounting terms. Okay, thank you.